Coinbase, Huobi lay off 20% of employees. Here's why. Two cryptocurrency giants, Coinbase and Huobi, made a shocking move, announcing they will be laying off 20% of their employees. The news comes as a surprise to many in the crypto world, as these companies have been at the forefront of the digital currency revolution. However, as the market faces uncertainty and the industry undergoes major changes, it is no surprise that these companies have no other option but to make tough decisions in order to stay competitive. The crypto community is on edge as they wait to see the consequences of this bold move. What does this mean for the future of crypto? Will this be a temporary setback or a sign of a larger trend in the industry? Hey folks, hello, and welcome back to my YouTube channel. You are watching Crypto on Point. Coinbase and Huobi have been major players in the industry for many years, and their struggles could indicate that the market is not as strong as it once was. However, it's important to note that this move could also be a sign of the company's adaptation to the market, as they are streamlining their operations to stay competitive and relevant. Stay tuned for our exclusive report and uncover the truth behind this surprising decision and its potential impact on the crypto market and the affected employees. But before we dig in, make sure to subscribe to the channel and hit the bell icon to stay updated with the latest videos from our channel. With that being said, let us get started. Coinbase and Huobi are two of the most well-known and respected companies in the cryptocurrency industry. They have been at the forefront of the digital currency revolution, offering a variety of services, including trading, custody, and lending. Both companies have seen tremendous growth in recent years and have become major players in the crypto market. Nevertheless, their recent announcement of reducing the headcount and leaving several jobless has created a panic in the market. Huobi's case. Soon after the collapse of FTX, crypto traders were scanning for clues as to what will be the next company to fall prey to the downturn in digital assets. And they didn't have to wait for long when digital currency exchange Huobi said it plans to bring down its global headcount by about 20% in the latest round of layoffs to hit the struggling cryptocurrency industry. Huobi's native HT token had fallen by nearly 11% in the first week of the new year to $4.64. The exchange has also seen increased outflows over the past week, and its overall trading volume has dropped to $366 million from $443 million in the past 24 hours. The planned layoff ratio is about 20%, Justin Sun, a Huobi advisory board member, told CNBC, adding the cuts have not yet been implemented. With the current state of the bear market, a very lean team will be maintained going forward. The personnel optimization aims to implement the brand strategy, optimize the structure, improve efficiency, and return to the top 3. Huobi had about 1,600 employees worldwide as of October, according to a Financial Times report. And as crypto investors started raising doubts over Huobi's financial health after the news broke, Sun was quick to dismiss concerns over the company's solvency as pure FUD, meaning fear, uncertainty, doubt, phrase crypto investors use to describe what they perceive as negative or false information. Users' assets are safe, he said. As a virtual asset trading platform that has been in operation for 10 years, Huobi's business philosophy is to protect the safety of its users' assets. But if this isn't proof that the crypto market is shaking, then here is more. Last month, Binance paused withdrawals of the USDC stablecoin, leading to concerns over its own ability to cover client redemptions. Though it has since resumed USDC withdrawals, as much as $6 billion in digital tokens were withdrawn from the exchange between December 12 and December 14. In a so-called proof of reserve statement on November 25, the centralized exchange revealed that it had a reserve ratio of 101%, indicating it had more assets than liabilities. However, many investors didn't buy the effectiveness of proof of reserves reports, which offer only a surface value of the assets an exchange holds at a single point in time. Consultancy Mazars, who had compiled a separate proof of reserves report for Binance, stopped producing such documents altogether for crypto firms on December 16, citing concerns regarding the way these reports are understood by the public. Having that said, Huobi explained in a post that, with the current state of the bear market, a very lean team will be maintained going forward. The personnel optimization aims to implement the brand strategy, optimize the structure, improve efficiency, and return to the top 3. In the same statement, Huobi also stressed that recent media allegations of the cryptocurrency exchange's supposed insolvency have no truth in them. The company's representative stated, "We are aware of the comments regarding the Huobi app and the safety of user assets. Such unfounded and inflammatory rumors not only damage Huobi's brand image, but ultimately affect the interests of Huobi users." Coinbase's case. After Coinbase shared its third quarter earnings report on November 3, the results caused the stock to drop at the time. In the report, it was clear that the firm's revenue was $590 million, below the analysts' expectation of $654 million. This revenue drop was actually a 50% drop from the previous year. The company also had a loss of $545 million, which was a steep drop year over year from the profit of $400 million. The report also mentioned that it had 8.5 million transacting users, down from 9.2 million users in the first quarter of the year. And it is no surprise that it had to make some tough decisions. And there came this news of these layoffs of Coinbase. As far as Coinbase is concerned, the company shared in an SEC filing that it would lay off approximately 20% of its staff, which makes around 950 employees, as part of larger cost-cutting measures amid continued turbulence in the cryptocurrency industry. The CEO, Armstrong, highlighted that Coinbase is well capitalized and crypto isn't going anywhere, but the firm has to proceed with layoffs to keep the appropriate operational efficiency. As part of a headcount reduction, Coinbase will shut down several projects with a lower probability of success, the CEO noted, without specifying what projects will be terminated. In fact, I believe recent events will ultimately end up benefiting Coinbase greatly, he stated, adding a reference to the growing regulatory clarity and Coinbase's opportunities due to the failure of FTX. He further added, "But it will take time for these changes to come to fruition, and we need to make sure we have the appropriate operational efficiency to weather downturns in the crypto market and capture opportunities that may emerge." Not only that, but as part of this restructuring plan to reduce its operating costs, the firm expects to spend about $149 million to $163 million, including $58 million to $68 million in cash charges related to employee severance and other termination benefits. The company expects the execution of the plan to be substantially complete by the second quarter of 2023, the filing notes. For Coinbase, this isn't the first time that the crypto giant has asked a bunch of their employees to step back. But these latest layoffs come months after Coinbase initially reduced its headcount by 18% in June 2022, with Armstrong citing a starting economic recession. As to answering why the company was planning to bring down their headcount, Armstrong said, "In 2022, the crypto market trended downwards along with the broader macroeconomy." He also added that, "We also saw the fallout from unscrupulous actors in the industry, and there could still be further contagion. In the face of increasingly challenging economic conditions, we made the difficult decision to further reduce the size of our teams to ensure we have the appropriate operational efficiency to weather downturns in the crypto market and capture opportunities that may emerge." In fact, with this third round of employees' exit, the firm has cut 2,110 workers since June 2022 and shows interest in slashing operating expenses by around 25% for the first quarter compared to Q4 of 2022. The company said it plans to complete the overall cost-cutting plan by the second quarter of this year. The memo concluded with the following statement: "Dark times also weed out bad companies, as we're seeing right now. But those of us who believe in crypto will keep building great products and increasing economic freedom in the world. Better days are ahead, and when they arrive, we'll be ready." Bottom line. This brings us to the end of the video. Don't miss out on the inside scoop. Subscribe to our channel for exclusive updates and analysis on the latest crypto news.